We're here to share with you a quick market update for the month of June. This information is taken from the Cromford Report with Michael Orr and Tina Tambour.
This time last year, the market was in full retreat, but pricing was just a few days away from its peak of $306.46 per square foot. Closings were still plentiful, driven by the demand from institutional investors and iBuyers who were just about to curtail their buying spree.
So much has changed in the last year, right? The gut-wrenching slowdown that took place in the second half of 2022, it's now a distant memory, and the market is slowly and cautiously recovering to a semblance of normalcy. Closings in June were unusually strong, up 21% from May, but these were driven by contracts signed in April when interest rates were more attractive than they are right now. A spike in mortgage rates at the end of May meant that we entered June with a weak count of listings under contract, down over 9% from the beginning of May. This means that we should expect relatively unimpressive closing counts for June.
It is common knowledge that demand is sensitive to interest rates, but thinking that higher interest rates lead to lower prices is simplistic and wrong. In the current environment, higher interest rates dramatically reduce the desire to pay off low-interest loans and so dispose of property. Those who bought at the peak during the first half of 2022 may be underwater, but unless a dramatic change in their circumstances make their financial situation desperate, they are unlikely to be motivated to sell and convert that loss on paper to a hard loss of real money.
So the weakness of supply is the main factor to consider when studying the current housing market. Despite the low number of homes going under contract, the number of homes for sale without a contract dropped another 6% and is now below 12,000. So this is an unhealthy supply, and it's almost impossible for prices to decline when supply is so weak and trending lower.
If supply were to rise, then a cooling trend could start to build. The monthly releases of building permit data suggests that future supply will be strong for rental multifamily property, but single-family homes to purchase are being planned in even smaller numbers. The recent decision to restrict future permits because of water concerns means that situation is likely to remain in place for a long time. The market will see less volume than we have become used to, but prices will be reinforced by the chronic supply.
Unless we get a significant reduction in mortgage rates, the affordability of homes will still remain a major problem. This will constrain sales volumes, but it is very unlikely to put downward pressure on pricing. Instead, we're much more likely to see a long-term price appreciation trend setting in once more, with the chronic shortage of supply being the overarching unsolved issue.